Folks, welcome to the Contrarian Trader. This is Bob Desmond. Let's begin with some housekeeping issues. The first is the fact that costs are going up for me. I have a new team of tech support, some back-end people helping me out, so prices are going up for the Contrarian Trader. So you can expect that late next week or the following week, the website will be updated to reflect a higher price, and a minimum $10 price hike is going to be going into effect. So the obvious question is, for members that are currently paying the $29.95, will you still pay the same price? Yes, of course. I'm not raising prices on you. Any new members that join between now and when the price hike goes up, you'll be locked in as well. I still have members going back to 2004 that are still paying the original $19.99. So just keep that in mind. If you're looking to pull the trigger on the Contrarian Trader, if you've been waiting, watching the blog, if you're interested, just jump in now, just in case you do like it. Get signed up, and you'll be locked in. Let's move on to IBD. Q4 GDP rose 2.8%, best since mid-2010, but below targets. About 0.4 below expectations. And the only thing that saved GDP from coming in lower was a restocking of inventories in Q4. Q4 pulled out the year for GDP. This economy is not growing as promised. You will hear touted the fact that unemployment is 8.4%. That's Obama administration bullcrap. It is not 8.4%. Real unemployment is at 17%. Salaries, income are not rising. You have a debt burden on the U.S. consumer that they're still trying to pay off. It's not good. And I point to this to my members all the time, and I rarely bring it out for the blog, but I'm going to do so today. What you're looking at is a chart of the Baltic Dry Sea Index. It's on a weekly basis. And for those who are not familiar with the Baltic Dry Sea Index, the Baltic Dry Sea Index is a measure of how much dry bulk shippers are able to charge for shipping goods overseas. Now, you could see back here in 07, and then we had a double top in 08, that they had pricing power. Ever since the financial collapse, they have been weak in a bear market. And you can see that pretty much for most of 11, we stayed in a trading range. Now, late 11, Q4, remember I said the restocking in Q4 is what saved us, but that's when the BDI just basically began to fall apart. And we are now approaching, we are 60 points away from the financial crisis lows of 2008. Now, Kramer likes to tout the fact that there's an oversupply of ships. One of my members sent me over a New York Times article backing up Kramer's claim. And I'm not going to dispute the fact that there is an overcapacity of ships, dry bulk ships. However, the fact that they're not even able to take up any of that slack to regain pricing power is ridiculous. Now, back here when they were ordering these ships, they saw that they needed them. There was value in bringing them online because there was demand. Now what you have is, you have these dry bulk shippers that are sitting there with ships. They're charging sub-market rates. Now, the obvious question then becomes, how do other industries deal with this problem? What do the airlines do so they can regain pricing power? Well, they raise fees and they cut flights. Last week, what did the natural gas producers do? Chesapeake Energy, what did they do? They cut supply. They cut production. So at some point in time, if they're not already doing it, these dry bulk carriers are going to mothball ships, thus bringing down the overcapacity of ships. And when they need them again, eventually they'll unmothball them and send them out to sea. The fact that they are not able to, even with the mothballing of ships, not being able to have any pricing power whatsoever, speaks volumes. Think about the fact that you have, this is a 10-year, this is a monthly chart of 10-year yield, not the price of bonds, but the yield of the 10-year Treasury bond. It is at all-time lows, less than 2%. And all we can deliver is 2.8% on an annualized basis in GDP. Are these guys nuts? All these foreclosures out there, you have mortgages that are pegged to the 10-year yield, and they can't they can't soak up this excess inventory. This is a hurt economy. Let's move on. That's my rant. Okay, trades last week. HGT, Hugoton Royalty Trust, Hugoton Royalty Trust. You'll remember, you can go back to last week's video on the blog. This is free. We were buying up Hugoton back here. And after our first purchase, which was up here, remember, we buy in increments. So we learned our lesson from our initial buy because we had an RSI that was so oversold, it was ridiculous. The fact that it went below 10 and had shown no signs of alleviating, I stepped back, reevaluated the trade, and I said, you know what? This is tied to a commodity. It's not, this sell-off has nothing to do with the stock of HGT. It has to do with the price of natural gas. So we watched and waited until natural gas went into extreme oversold levels. Then we began accumulating more. We finished our buying of HGT last Monday with a very large purchase, and it just shot up. So we did well. This was a great trade. We pulled 1/3 of this trade off the table. We still sit with 2/3 of our original position. Friday's price action is fairly good. You might see some sideways consolidation here. What you want to do is draw your trend line up. Use this as a stop loss point. If you're looking to buy here, I would say the risk to reward is no longer in your favor. As a contrarian, what we do is we look for when there is blood in the streets. And as you can see back here, there was blood in the streets. There was fear. And as I mentioned to my members in the week ahead commentary, this candlestick, although it had a huge topping tail from last Friday, not this Friday, the previous Friday, which is traditionally bearish, I said, you know what? It's more than likely. You just saw some last minute sellers that just wanted to get out. And for the fact that it spent most of the day up and then closed off of its lows, it just showed me that there was just a capitulation in the stock. And the fact that it was able to hold on to the previous day's lows, not make new daily lows, it was actually a bullish indicator. And sure enough, it shot up. So great trade. We still have this position. It's a big yielder. So more than likely what I'm going to do is I'm going to keep maybe 500 shares, throw it into my long-term portfolio, sit with it. We got into it when it was yielding over 7%. Now, granted, yes, that yield has been cut back a bit, but still, it's a great yielder. We got it at a fantastic price. You couldn't do any better with the price we got it at, so we're happy with the purchase. And we're going to look to stay longer of this for the long term. But we are going to be divesting some of this position, hopefully this week, if it reaches our price target. And if you want to know what that price target is, join the 14-day free trial offer. Broad Vision. We traded Broad Vision. I touched upon this one last week as well. I couldn't get shares through TD Ameritrade, so I went through another boutique broker that I use who specializes in this, and we were able to get a position. The stock still shot up. I think we opened it up. Yes, we opened it up here, and the stock subsequently shot up. I tried to get short more, couldn't get any. There was no stock to borrow. There's a very small float, and when the stock collapsed after we put in this topping tail here, I just took profits off the table, and I couldn't get any more stock. So if I couldn't average my costs down to make it really enticing to stay in here, I would prefer to say, you know what, let's take profits, move to the sideline. There's too much competition to get these shares that are short. Now, if you want to get short, you're nuts. This is off the table now. I wouldn't long it right now. I wouldn't short it. My guess is that you're probably going to see some sideways action here to the upside. We'll keep an eye on it and maybe, just maybe, get long of BVSN. Cores. I touched upon this one last week. We opened a position on Cores. Last week, I used a long position. I touted it as being a short position last week. But when I went into it with members in the week ahead commentary last Sunday, I said, you know what? what we'll probably do is we'll probably open up a long position in cores, because cores at that time was trading it with an RSI of about 82. And usually when a stock gets above 80, it tends to proceed higher, which cores did. So I didn't forget the fact that, you know what, the stock is overbought. So automatically, 3% trailing stop loss order in on it. It rallied. We were stopped out with a small profit. We'll look to get long of this once again. It is not a short as of right now. I'm looking for this to rally higher. If it does, great. We'll look to get short of it if it meets our criteria. Again, but as of right now, if anything, it's a long. Nice bottoming tails here. So we'll keep an eye on it. Okay, NRGY. This was sent over to me from fellow member Dimitri. This did pop up on my radar screen. I was going to touch upon it anyway, so good job, Dimitri, for catching this one. NRGY. This is going to be similar to the HGT trade. Yes, you have an RSI that's at extreme oversold levels. However, remember, it's at 15.87. Now, this is a stock that's tied to propane and natural gas. So, and more so to propane. So we want to see what the prices are for propane. I don't like this stock yet as a long. Yes, technically, is it at extreme oversold levels on the RSI? Yes. But I see reasons, and I'm going to go into it, specifically with the stochastics, MACD histogram. None of these are meeting the criteria for me to want to get long of this stock just yet. We might in the coming week. But as of right now, I would stay away from it. It's not a short. It's not a long. So we're going to keep an eye on it. More than likely, we'll be long of it, especially if we get rid of that HGT trade. That way we don't have any overlapping trades in the same sector. SHLD, I touched upon this one last week. We didn't get short of this one. I wasn't quick enough on it. We should have been short here. Would have made a few bucks, but it would have been a nice trade. As of right now, it's off the table. Here's where you want to start drawing your trend lines. And if it breaks below Friday's lows, you want to get out of the stock if you're long. If members who are still long, you're going to want to get out of this. Remember, we were touting this as a long stock back here. Look at the rally that this stock had. Great trade for those who are still in it. Congratulations. I got out with profits earlier. I did not enjoy this entire ride up. So you have your pullback here. Let's see whether or not it's going to be able to hold this support level. It held it for 3 days. Let's see if it can hold that. If it does, and it rallies above that 50-day moving average, it's a buy. If it breaks down below this 43.51 level, you want to get out. And if you're good at using your trailing stop loss orders, if you're disciplined, short it. CLVS, I touted this as a short last week. It did not meet our criteria to get short. Therefore, we had the pullback, nice bull rally on Friday. I like this candlestick, a little bit of the topping tail here as nearing resistance. There's no resistance above 20. This is a new stock with no historical resistance above 20. No overhead supply. If we see a breakout above 20, this is a long. I will not go shorting this until we get probably above 86 to 90 on this. So we'll use a trailing stop loss order if we do get long. If that trailing stop loss order is triggered, more than likely it'll be time to get short. So we don't sit there in front of a computer and we watch the stock all day. You need to let the computer do the work. It takes the emotion out of the trade. You buy it. What's your plan? Your plan is to use a trailing stop loss order in anticipation of what? In anticipation the stock is reaching extreme overbought levels. That's when you want to look to get short of the stock. So try to take the emotion out of trading by using the computer to trigger your trades in advance orders. I'm going to be touting this type of behavior more and more because it works. You want to take the emotion and the impulsiveness out of your trading. Once you do so, you become a very, very dangerous trader. I mean, to be really good, we need to get that emotion out of the trading, and that's what hurts the best of traders. The VIX. We're going to start looking to get short of other stocks as well because the VIX did some bottoming last week. And that in and of itself doesn't mean that you should be going to get short of the market. I do believe that you do have some potential downside for the downside on the VIX, but when the VIX is low, you got to go, meaning You got to start scaling back on your long trades, start looking for opportunities to the short side. Just because it's down in the teens doesn't mean that you just go getting short. You look for opportunities. Now remember, you had a low VIX for quite some time down in the teens, as low as 1492, and even lower, I believe, back in 2010. So just because it's low, you don't go dumping your longs, you don't go getting net short, you look for your opportunities to get short of the market and individual stocks. TZA. TZA I like to use as my trading vehicle when I short the markets. I think that we're going to see lower lows on TZA with the possibility and probability that we see extreme oversold conditions on the TZA. So we're going to be looking to get long of the TZA if we see a parabolic rally in the IWM. Remember, the TZA puts you 3 times short of the IWM. That means that this is a leveraged ETF, very, very volatile. So please be aware of that. If you don't like the volatility, look to short the IWM. I'll be going to all these charts in much greater detail with members in the week ahead commentary, which will be sent out today. So TZA remains on our watch list, and we're beginning to like it more and more. We have an RSI below 30. I know in your technical books that are out there, buy a stock or ETF when it goes below 30. That's bullcrap. This ETF can go a lot lower. So please do not just go paying attention to a passage in a technical analysis book that tells you to buy a stock or an ETF when it goes below 30. That will get you burned. Please, I beg of you, please be careful. And this Stoke right here, I call this ledging. I pretty much guarantee, here you saw ledging over here. When you see ledging below 20, the probability of the RSI heading lower is likely. But there are other things on this chart, mainly the MACD, that I like. And I'll be going into that with members later on today, along with potential price targets of getting long of the TZA. This is another one that hit our watch list for a potential short. Alpine Global Premier Properties. It's got an RSI of above 85. This volume is still to the high side. The fact that you saw fairly decent volume and then a spike higher in volume leads me to believe that there's potential movement higher for this stock. So I'm not going to go longing it, baby, but I'm definitely not going to go shorting it yet. So I'll be going into this in more detail with members later on today. TROX, I don't know what they do. It's a pink sheet stock, and I really don't care what they do. You have resistance here at 146. Topping tail, let's see whether or not it's going to be able to break out above it. RSI is at 86, which is technically at overbought levels. Volume is to the upside. There's still money flowing into the stock. Stokes I'm not liking yet. MACD is not screaming to get short of the stock yet. So we're going to watch this. Remember, all of these indicators, we don't use just simply the RSI to trade short or long. We use multiple indicators, the candlesticks, volume, and support and resistance levels. All that needs to come into a nice, neat little package, and then we get long or short of a stock. GHL, Greenhill and Company Financial Services stock. What particularly did they do? I don't know. These thugs could be in derivatives for all I know. I don't know what they do. I really don't care. I care more about the charts. I care about the fact that they're not being sought as a takeover target, or is there a concern that they're going to go bankrupt? As long as those are off the table, the fact that they're being potential buyout candidates, being bought out, or there's a concern that they could be no more of an ongoing concern, then I look to trade the stock in either direction. I don't particularly care which. And that's it, folks. Remember, the prices are going up, so please, if you're thinking about joining the Contrarian Trader, do it now before prices go up. And for those watching this on YouTube, I'd ask, please sign up for my channel so you get alerted to when I send out a new video. And if you're watching this on the homepage of the website, please sign up for the email newsletter. If you haven't already done so, that'll let you know when I post a new blog. Everybody else, have a great, great trading week, and I'll talk to you soon. Bye-bye, folks.